GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. I'm Kyle Reedhead, and I believe that Web3 is going to change the world. And that's why we're carving a path for doers to confidently build and invest in Web3. In today's episode, I'm joined with Raul, and we are talking on a Twitter space with a topic called Are We All Screwed? Regulation in Crypto Market Updates. A lot has been happening over the last week in terms of the regulatory environment, mainly in the US, but also some stories coming out of other countries as well. And the market took a beating on Friday night, Saturday morning as a result of this. And so we've had a lot of questions, and we wanted to get on and just explain what the heck is going on here in this space right now and what you should be doing or thinking about during these times. There is some craziness going on in the US and then other countries taking advantage of that, which is great for the overall crypto market. And so again, we're going to dive into the details around this so that you're up to date and understand what to do in terms of investing, but also in terms of if you're building into this space. So we'll cover that as well as much more in today's episode. So friends, thanks so much for joining. And if you haven't already, make sure to subscribe to our channel, whether you're on Spotify, Apple Music, YouTube. Make sure to subscribe, give us a like, and definitely comment as well and let us know what you think of the regulatory environment. Again, you can just comment below and let us know your thoughts here. Feel free to add to what we are discussing and talking about. Thanks so much for joining us in this episode. And before we get into this one, we'll just take a quick second to hear from our sponsors.
The future of social media is here, and that future lives in Web3 on top of Lens protocol. Web2 social platforms are broken and ripe for disruption. You see, the epicenter of social media is the creators, and yet they are the most neglected. Web2 platforms like Facebook, TikTok, and Instagram are all essentially robbing creators of their worth. Creators are a new type of entrepreneur, forming new types of businesses. Yet with Web2 platforms, creators don't own their content or their profiles, and that's their product and business. Instead, they are tied to the platforms they choose to create on. Well, just like how crypto is freeing us from banks, Web3 is freeing us from these centralized platforms. On Lens protocol, creators own their content, own their profile, and even their social graph and followers in the form of NFTs. This allows you to move freely from one social application to another with your content, profile, and followers moving along with you. Lens protocol enables self-sovereignty for your social graph and interoperability across the internet. At Web3 Academy, we believe this is the future of social, and that's why we've partnered with Lens to ensure that the path of social media is heading in the right direction. Visit lens.xyz to learn more today.
What's up, y'all doers? We're seeing signs on chain of the very early stages of a crypto bull run. There's a big wave coming, and we want to make sure you're on it. Now's the time to capitalize on the opportunity. How, you ask? By starting to practice consistent dollar cost average buys into strong network-based assets like Ethereum and Bitcoin. However, when buying, please make sure to use a trusted exchange. Our newest sponsor, Buy DeFi, is a reliable exchange that offers you a platform to turn your fiat into crypto. They also offer awesome rewards, allowing you to earn up to $2,800 for completing easy tasks like setting up two-factor authentication and verifying your identity. If you're eager to get into the market, get started with Buy DeFi now by visiting buydefi.com, that's BYDFI.com, or clicking the link in the description below.
Okay. So we had a lot of news over the weekend with regulation coming from the US, and the market dropped and it crashed. Everyone was freaking out. Basically, what happened was on Monday last week, the whole mayhem started with Binance getting charged with 13 charges by the SEC. We talked about this last week on the podcast, but just a reminder for everyone. Then on Tuesday, Coinbase was sued by the SEC because they were listing securities. And over the weekend, Crypto.com shut down its institutional service, basically just a platform which is similar to their retail platform, but for institutions who need to KYC in a different way. If you were a retail investor, they said that it was due to low demand from institutions investing in crypto nowadays because of everything that's going on. But I have a feeling that it's just to stay compliant with the SEC and, its laws and whatever. Their laws are very unclear, but I think everyone is just scared to get a suit. So they just want to comply with whatever they think it's the law. So that's why they shut down, I think. Then we had Robinhood late Friday announcing that they're going to delist Cardano, Matic, and Solana from their platform. So basically, the way Robinhood works, you can buy stocks and crypto there. Like it's a custodial wallet, just like Binance and Coinbase. And they will delist these three tokens, so Cardano, Matic, and Solana, at the end of this month. And if you don't sell your tokens, if you're still going to hold tokens in your wallet, they will basically sell those tokens for you when the time comes. So yeah, a bit scary, a bit sketchy, but that's what's going to happen. The reason again is because the SEC listed these tokens as securities, and this whole war against crypto led to about 300 million liquidations. There were a lot of people posting on Twitter how they lost their net worth because they got liquidated. A lot of futures got drawn back. And because of all of this, prices of most altcoins went down between 20 and 30% on Saturday morning. They kind of stabilized there over the weekend, but it's not looking great. So what we're going to talk about is, just make the situation a bit clearer, I guess. So Kyle, why don't you start us off? What do you make of this whole situation?
What do I make of the whole situation? It's a bit of a shit show, I think, for the industry. The SEC has, had it out for this industry for a long time, and it's unfortunate. I mean, the fact that they gave approval to Coinbase to IPO with their existing business model, with all of these existing tokens already on their platform, to now come and sue them is a bit wild. I don't know about the situation with Binance other than the security stuff, but the rest of it, don't really know. It's a black hole, so who knows? So maybe they have a reason for that. But in terms of the securities laws and that, I think they should just be, regulating and telling us what is a security and what is not. And instead, they're going to lawsuits for that, which sucks for many reasons. One, it creates a lot of fear, uncertainty, and doubt. So we have all these platforms that may or may not be delisting something that is maybe a security, may not be security, right? But they're delisting them anyway. We don't know if Solana and Cardano and those are securities, yet Robinhood is delisting them, which is crazy. They should just come out and say, yes, this is, or we believe this is. Instead, it's hey, we're going to go to court, which is going to take years, and then we'll decide, right? So it's a shitty way to do this, but that's exactly what I think Gary Gensler has been wanting to do. For whatever his motives are, I don't know. I can see that. You can tell that his goal is to just delay things as much as possible. So it's unfortunate, but I think where this goes is, we also had over the weekend a representative in Hong Kong say, hey, Coinbase, you're welcome to come here. We also had A16Z Crypto, which is a tech / investment firm. I'm one of the biggest in crypto, but also in other markets as well. They are now opening an office in the UK. The Prime Minister of the UK has said, hey, we welcome crypto. We're going to create and already have created really good regulation. So companies are welcome to come and build there, and exchanges are welcome to come and transact there and do what they do. So we call this regulatory arbitrage, right? The US is not giving good regulation, if any regulation at all. And so this is a great opportunity for other countries, other financial hubs around the world, like the UK, like Dubai, like Singapore, like Hong Kong. And this has happened many times in the past. So the Eurodollar, one of the biggest markets in the world, that has came from Europe and the UK because the US wouldn't allow it. FX trading is something that happens overseas because the US wouldn't allow it. Derivatives happens in the UK, again, because there was just not good regulation in the US. These happened many, many decades ago, but that was a regulatory arbitrage for the UK. And now they host some of the largest markets in the world as a result of the US basically moving that elsewhere. And so same thing here, right? This is the next phase of the financial markets, and just like derivatives was and FX markets, et cetera. And so it looks like, anyway, so far, that the US is going to miss out on that one too. But it's fine. Short term, this sucks right now. Those who are on these exchanges that want to hold on to this stuff and now can't, it's quite frustrating. Coinbase isn't delisting anything, so you can still use it. Obviously, Robinhood has. But I think long term, nothing really changes here. US investors will still be able to invest in this stuff. And same with, for example, institutions that want to use this, they're just going to open up offices in the UK, in Singapore, in other jurisdictions, and they'll continue to do their crypto trading and their crypto investments there. That's how it works. All the biggest companies in the US that want to use derivatives and FX and all these other things, they still exist. They just open up offices in London, and then they go and they do that. And so the capital still flows there. They just can't run it out of their head office in New York. Instead, they have to do it in London. So it doesn't really matter long term. So I actually don't think this is as big of a deal as some people are saying on Twitter, but that's my quick summary. I don't know, Raul, if you have any additional questions on that.
Yeah, I think this all sounds like a small hurdle in terms of like the long-term plan for crypto and, the innovation. Probably it looks like the US will miss out on a lot of this because other countries like the UK and Hong Kong are jumping on this to capitalize on getting these companies in their countries, which is going to be interesting to see, like if these companies are actually going to make a move, like to completely detach themselves from the US. It would be really, really interesting to see, and that would be a major shift. I think we have some time today to talk about this, but can we just go back and talk about like what a security is? Can you just explain that in like 5 minutes?
Yeah, absolutely. So there's a lot of confusion in this. So the security is kind of there's an open-ended definition to what it is. So there isn't a specific definition, but the best they do is back in the 30s, I believe it was, they created what's called the Howey test, which is basically a security is something that is an enterprise that takes investment from other people that expect profit, and the work or like the output of that enterprise comes from the work of other people. So there's sort of four components, right? It has to be a company. Okay. There has to be an enterprise. There has to be some sort of investment in the beginning. Other people have to be working at this company to like grow it. And there has to be a expectation of profit. And so it has to fit all four of those for it to be deemed a security, right? So you think of like a commodity, which is the other end of the spectrum. These are also things that you can expect to profit from. Some people work in them, but they just don't have a commodity itself is not a company, right? Like wheat, for example, is not a company, right? So there's different ends of that spectrum. Same with like art or trading cards. These are all things we sell for profit, right? And that you might invest in, but there's no company around them, right? So there's no enterprise structure, or there's no people actually working to make that thing, have value. There's all these different components to it. It needs to be all four. And that's where things get very difficult with crypto. To be fair, there are a lot of securities in crypto. Absolutely, there are. A lot of the ICOs from 2017, 2018, those were securities. It was exactly a company raising a token for capital that they were going to pay to hire developers and a team with the expectation of making money. So there are a lot of crypto securities, and that's fine. And those should be regulated. Those should fall under the Securities Act. They should go and do their paperwork. People think because it's crypto, everything just has to be against regulation. Like that's not how it works. So those companies that just, instead of doing it the normal way, where you got to get lawyers and all this stuff to get equity and to raise capital, those in the crypto world should follow these security laws 100%. We're not disputing that. It's the fact that you have things like Ethereum and Bitcoin and even Solana today, which maybe there's enterprise around the protocol itself, but like Solana is not an enterprise. Solana Foundation is the company. And so it's not an enterprise itself, Solana. It is a token that people did invest in to make future money, but Solana itself doesn't have a company, Solana Foundation. So like the other idea of this is like maybe Sol was a security at some point, but once it gets decentralized enough to it's no longer a company, it may have moved from a security now over to commodity. So it doesn't really fit that idea. So there's this sort of spectrum. It's a weird situation in the US. And so that's what we're going to have to figure out here in court, I guess, is where it's going to all play out. We actually have the Ripple case with XRP, same sort of idea. That's been going through court for a while now, and that'll get resolved. I think it's actually really soon. It could be this week or the next couple of weeks. So that'll be very interesting. The weird thing about crypto is some of them are securities where you can raise capital, but then they also can be programmed to do many other things. And so it's just a technology and a use case we've never really used before, and that's never really existed. So we don't really know where it falls in the category of securities yet, but most of them are not, for sure, at least not the ones they're talking about in terms of like Cardano, Solana, ETH. Like these are definitely not securities. It just doesn't make sense. So we just need the court to decide on that. I think Coinbase is pretty confident that they will. The last note I would say, as I was watching an interview with Brian Armstrong with the Wall Street Journal, I think it was over the weekend, they were just talking about, why they don't have more clarity. And has Brian Armstrong, the CEO and founder of Coinbase, spoken with Gary Gensler, the head of the SEC, and he said that he won't meet with them. They've been trying for years, and Gary Gensler literally will not meet with them, which is crazy because the SEC has approved Coinbase to go public. So usually they would meet with him. And Brian's like, I meet with every regulatory body all over the world. The only one I can't is Gary Gensler. He's the only head of regulatory that he cannot get a meeting with, which is just very odd for a public company with, obviously that's going to court in that too. It's a very weird situation, but we'll see where things play out. But I mean, in other countries, this is an issue. The big issue of why this is a problem in the US is there's two regulatory bodies. There's the CFTC, which governs the commodities, and then there's the SEC, which governs securities. Every other country in the world just has one regulatory body that governs both of them. And so the weird thing about the US is there's like this turf war of the CFTC and the SEC, where SEC saying everything's a security, CFTC saying everything's a commodity, and they're like battling. It's just childish, to be completely honest.
Not only don't have any structure, they also like apply laws to new technologies that have been written so many years ago, like almost 100 years ago, which just doesn't make any sense because it's something new. We can't regulate something new with ancient laws, which is what Coinbase has been advocating for, to get, more clarity and to have these laws made for these new technologies. But I agree with you. Like a lot of ICOs from back in the day they sound like a security, but most of the crypto industry isn't. And that's what Gary Gensler was preaching in his, when he taught at Harvard. He had this interview where he said that 70% of the crypto market wasn't a security. And now he's going against that just 2 years later, and he's going against his word.
And just to add to that, it's okay if there are crypto tokens that are securities. That's fine. Yeah. And it makes sense because it's a much more efficient way to raise capital. It is better to create a security on a blockchain than it is to do it in the old way, in the traditional finance way. So like we will have many securities on blockchains. Absolutely. It's way cheaper for any company in the world to register a security via a blockchain than it is to do it in the traditional way to do it. So like that's fine. It just means that if you're a security, of course, you need to go and you need to fill out some paperwork and you need to give reports and blah, blah, blah. And that's completely normal because you're a company that's in the US. And so that's fine. But there's just other things that are not necessarily securities, like NFTs, right? Like if trading cards are not securities, they should not have to write reports and get files with the SEC. That makes no sense. So same with NFTs, depending on how you use them, would not need that either. Same with something like Bitcoin, which is more like a currency. Well, that's not a security, it's a currency, right? And those who create currencies don't need to go to the SEC. They govern securities. So again, there's going to be many different types of tokens, and we just need to not box them all in one, I think is what a lot of people are not really wrapping their heads around.
Yeah, you wrapped it up well there to, get a sense of like what's happening and how the SEC is fighting this. But what I want to touch on is like what's next for the industry, and like for our listeners who are like wondering what to do next, what, investments to make to stay safe and compliant and stuff like that. What's next for the industry? What should everyone do from now on?
So I would say, first of all, don't get scared of these things. A lot of them are just FUD. I know a lot of altcoins, if you want to call them that, but these other, lower market cap tokens have gotten wrecked, 20, 25% in a couple hours, really, over the weekend as a result of this, which sucks. But also, you shouldn't be putting a lot of money in these things anyway. They're so new. We don't know yet what they are. Like you said, a bunch of people lost their life savings and were tweeting that. Like, that's their own fault. Like, you should never be putting a bunch of money in these like smaller tokens. It makes no sense. Bitcoin, ETH, these are your safe havens that basically represent the entire industry. And we know that they are going to be fine. And so like, if you're trying to invest, just put your money in these safe assets. They go up 150% per year on average. You don't need to try and hit these like 100Xs. There's a good chance you're not going to get it. And so keep it safe and just go to these assets that you know are going to go up 150% per year on average. It's better than Warren Buffett. It's better than every other personal investor in the world. And you can do that so easily. And these things don't really impact it. I mean, like when all this came out and everything went down 25%, ETH was down like 5% and Bitcoin down like 3.5%. Right? And they're already almost back up to where they were. So like, it's not that difficult. And Ethereum is a global smart contract platform that's used by the world. I mean, was it the Norwegian government that just launched a stable coin on top of it over the weekend as well?
On Arbitrum, yes.
On Arbitrum, right. So like, guys, adoption's happening. It's happening all around the world. US is a big market and we need that, of course. But there's going to be some pain there and that shit's got to get figured out. They need to get regulation. But the rest of the world's going to move forward with this. And so for now, anyway, especially as we're in a bear market, although I think we're in the early stages of a bull market, but that's going to be led by Bitcoin and ETH. And until those things start to skyrocket, you should not be putting a bunch of money in these smaller, I hate the term altcoin, but other tokens for the meantime, because it's so risky and it just doesn't make a lot of sense right now. But you have some for sure bets in Bitcoin and ETH. So it's like, it just doesn't make sense to not be in that. And other than that, like, just continue to stay educated on this stuff and build your conviction, because look, this stuff's going to happen. We're going to have these ups and downs. We're always going to have these scares with the US. We've had them with China previously, with India before, but they're short term, right? Because again, one, government's loss is another's opportunity. And that's why we see China, who's getting more bullish on crypto right now, even though they were the ones banning it a couple of years ago, right? And you see the UK going basically all in on this stuff. So this space is happening with or without the US. And I think the thing people need to understand is the US is going to be in this space. They're not going to leave it. They're just going to take a bit, and they're probably going to fuck up for a couple of years, hopefully less. But again, this is the SEC and the CFTC. There's also just regulation from Congress, which is starting to gain some traction, and they seem to be very serious about this because they know there's a lot of jobs that they're going to lose here. And AI is about to take a lot of jobs, and the US government knows that. And so crypto is a place where that might bring a lot of jobs. If Coinbase were to leave, that would be thousands and thousands of Americans that would lose a job, right? I think that governments are not stupid. They know that Bitcoin, Ethereum are gaining at the levels that they are, and they're gaining adoption. And this is a technology that's here to stay. They're not stupid. So they know that there's a lot of jobs that can come from this, and it's good for the world. So I think the governments will get this right. Again, SEC is not government. That's a regulatory body. I think they're the ones that just, have some beef with CFTC. And so there's this like childish fighting going on. But I think ultimately the US will figure it out. It's just going to take some time. So, I mean, if you're building the space, probably don't do it in the US. Just go elsewhere, unfortunately, because tokens can be a very viable tool for a business, whether that is to raise capital or it's as a marketing tool or rewards or loyalty or social status or whatever you're using those tokens for. They can be very valuable to a business, but you just don't have the ability to do a lot of that or to use it in its full capacity in the US right now until we get clarity. So if you want to start a business, go to the UK, go to Singapore, go to Hong Kong, go to Dubai, go to El Salvador, right? There are options. That's my advice so far.
Yeah, I think you nailed it with the 150% a year. Like if you would just buy spot a crypto, a Bitcoin and ETH, you would have, exposure to that 150% a year. And you wouldn't be part of the statistics where people lost money of
don't leverage. That's a good one. You don't even leverage something that goes up 150% per year. It's insane to go and take a loan out on that and buy more of it. That's just wildness. Don't do that. Look, I made that mistake. I did it too when I first got into crypto many years ago, and I lost ETH and I lost in Bitcoin. And if I wouldn't have leveraged, I would have still had that, and I would have gotten 150% per year on average. Instead, I got zero, which is crazy to think of. So don't get greedy. And the other thing is, buy these dips. That was a great buying opportunity over the weekend, to be completely honest. So take advantage of this. Sorry, Raul, you can continue.
Yeah, just wanted to remind people that $300 million in liquidations happened on Saturday morning. And if you're trading, you would have probably been part of that statistic if you're trading on leverage, which is crazy. 300 million just overnight.
Yeah, absolutely wild. So unless you're a professional, don't be taking out leverage. Don't be diving into shitcoins right now. It just doesn't make sense. The risk reward is just not there at the moment. Wait till we have more clarity. For now, though, just hold ETH, hold Bitcoin, and you're going to do extremely well.
Okay, I think we made everything clear. Anything else you want to remind our listeners about, Kai?
A session in our Discord tomorrow. I'm not sure if podcast listeners will get this time, I believe, at 12 p.m. EST. Inside the Discord, we will be doing what we call an Eyes on Chain event. And basically, we're going to be looking at the top 5 charts, top 5 themes with a bunch of charts to back it up. So to help you kind of navigate the space and understand what's happening on chain. So make sure to come check that out. We do it once a month. We get a bunch of the community in, and it's a great session. We have time for AMA, all that kind of stuff. So make sure to check that out if you haven't already. Podcast listeners, you'll find a link to our newsletter in the show notes below, which will give you more details on that. And Twitter space people who are in here now or watching this later, just go to our link in bio and you'll see our newsletter link to get more info on that.
Cool. For sure, join tomorrow.
Okay. All right, guys. Well, thanks so much. We're going to wrap up here. Thanks so much, everyone. And we'll see you guys in the next one. We do this every single Monday at 12 p.m. EST. So make sure to check us out next week. Thanks, everyone, and all the best. Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.